Hello traders, it's Tuesday, May the 10th, and this is OptionsXO's New York Session Market Review. Markets are still reacting to Sunday's weak trade data from China. Today, an overnight CPI came in negative month on month and disappointed investors at 2.3% on the year. Inflation is expected to remain steady. Chinese indexes started the session high but erased gains during the session, and the Nikkei's 2.2% increase is several times that of any other on the globe. Yesterday, we reported a growing discontent in the central bank with Kuroda's negative interest rates. Factory orders in Germany were a bright spot of sun yesterday until industrial production came in this morning. As opposed to yesterday's tripled result, production fell by 1.3% compared to last month's 0.7%, and the nation's trade balance has widened. The British Retail Consortium reported a larger drop in retail sales, 0.9%, and housing prices declined more than expected as well. As the Brexit vote draws nearer, the UK's trade deficit with the EU is now at £8 billion, its highest level ever. Yesterday's US labour market conditions index showed a slight improvement, but is still located in negative territory after, again, a drastically disappointing NFP last Friday that is lowering chances of a FOMC rate hike in June again. The US dollar and major indexes meanwhile continue to range sideways, the dollar on an upward bias and the S&P slightly down. Oil news starts with Iran's cut of June selling prices for Asian markets. This just as Saudi Arabia announced an increase in its prices. Outages in Canadian production are pressuring prices upwards, but these are still low on high inventories. Still ahead today, wholesale inventories from the US at 2 p.m. GMT, a financial stability report from the Royal Bank of New Zealand at 8, and the API's weekly oil report at 8:30. That's all for today. See you again tomorrow. Until then, happy trading.